please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
But let's move on to the big stock which will be in focus today. TCS will be reacting to numbers today. The IT bellwether reported largely in line quarter. The stock ended at the low point of the day yesterday, but remember, all through the week it was up 4%. So large part was expected perhaps. Anisha, what are the key highlights and what are the brokerages making of it?
Well, yes, Mangalam, to tell you the key highlights are the positives are in the digital, retail as well as European market space, but BFSI continues to remain a drag for the company. Now, to run you through the numbers, first up, the constant currency growth came in at 1.3%, better than expectations, which were around 1.1%. Dollar revenue growth of 1%, again better than expectations. The key positive was the volume growth that came in at 1.6%. It is the highest that we have seen in the December quarter over the last 3 years, so good number coming in there. EBIT margin, tad bit of disappointment because it expansion came up just 10 basis point versus the 70 basis point expansion that we were penciling in. But the analysts are saying that this is what they expected, so pretty much on expected lines. Profit also tad bit ahead of estimates. Now, in terms of the segments, what did really well for them this time is the digital space, because that one is up around 14% quarter on quarter, and it now contributes over 22% to company's revenue. The management commentary on digital was exceptionally strong, and they expected to materially contribute to the revenues going forward as well. Remember, there was one major deal that also happened in the digital space for them. Retail is what they call the turnaround this time. It grew by 6.4%, and more importantly, the commentary on it was that from next year onwards, it can report a double-digit growth. Remember, on retail, they had mentioned that last quarter it had bottomed out and things are looking up, and that is precisely what we are seeing in the numbers, so positive there. BFS, however, there is still no clarity emerging on that front. They are saying that by mid-18 is when they will see more signs or overall recovery in that particular stage. You talked about what brokerages are making of it. Well, the overall sentiment remains that BFSI remains the Achilles heel for the company. CLSA has upgraded the target multiple now to 19 with a target of 3250 versus 3100 earlier. But the problem actually remains as far as the BFSI concerned, because Credit Suisse says because if you remove the financial services that showed a decline of 1.5%, their growth this quarter was almost 2.5% in a seasonally weak quarter. That is an exceptionally strong growth coming in. In fact, the management commentary on the outlook was rather strong. They said that they're more optimistic at the beginning of FY18. In fact, let's listen into the management themselves of what they thought about digital space as well as the outlook for 2018.
Confidence across verticals is continuing to be improving. If you look at retail, this holiday season actually saw many of the more traditional retailers leverage the power of digital to really establish very strong growth. So we saw companies like Home Depot, Best Buy, all of them come out with sterling results. So you see more traditional companies leverage technology to deliver performance, and that is quite positive and encouraging.
Positive and encouraging, that's the commentary coming in from TCS, and as we speak, they've won a $2 billion order coming in from Transamerica, a financial company. So to get more and to get more from the management, catch them live only on CNBC TV18. But let's move away from TCS to another IT bellwether. Anisha, Infosys will be reporting the numbers later today. The street is fairly excited from the looks of it, 2.5% higher yesterday.
Well, clearly the street is excited, and remember, there will be a one-time bump up in the numbers, and that is why it should look exceptionally strong. We had heard from the management just a couple of days ago that they're planning to bring in a tax reversal of $225 million that can bump up the EPS of the quarter by over 6.5 rupees, 10% of the annual EPS itself, so that should come up in the numbers. But other than that, if you remove that one-time adjustment, let's take a look at what the analysts are expecting. Now, in terms of the dollar revenue growth, they're working with a number of 1% uptick. Rupee revenue growth is seen at 1.5%. In terms of the EBIT margin, that is expected to remain flat this time at 24.1%. One thing and one space that the analysts would keenly keep an eye out on is the margin space. The constant currency growth is also expected to remain at 1%. The analysts' expectations are pretty much condensed and pointing towards the same direction of 1% growth as far as Infosys is concerned. Let's see whether they step out of that as far as the top line is concerned or not, because of course the bottom line will show that tax reversal. Other than that, the key key things to watch out for. We have seen a retail recovery happening for TCS. Whether that happens for Infosys or not is also a key thing to watch out for. BFS, as we have seen, TCS says that there is no clarity on it. If there is any word coming from the management of Infosys about how retail as well as BFSI is doing for them, would be very important to watch out for. Other than that, the other income and the weak EBIT might lead to a bit of a squeeze of profits is what we're expecting. Other than that, if you look at the margin expansion possibility, well, they have been doing a lot over the last couple of quarters, and that's why this time around people expect that the levels to expand it further might be a bit limited. Also, the cross currency, there is not much of impact coming in there this time around. So if you go and strip off the numbers as far as the one-time number is concerned, the street expects them to maintain the guidance on all parameters as well as to report a steady set is what they're expecting, Mangla.